Have you ever thought about how some people turn small amounts of money into life-changing wealth? Imagine starting with just $100 and growing it into $10,000. Sounds impossible. It's not. In fact, with the right strategy and mindset, it's entirely doable. In this video, I want to reveal the secret to smart investing, showing you how to multiply a small initial investment into something far more significant. Stick around until the end for a bonus tip that could accelerate your results even further. Turning a small amount like $100 into $10,000 might seem unrealistic at first, but it's more achievable than you think when you apply the right investing principles. The secret lies in using smart, low-risk strategies consistently over time. This isn't about gambling your money or taking wild risks. It's about leveraging small, steady wins that compound into something much bigger. In this video, we'll walk through 5 proven strategies that can help you grow a small investment into significant wealth. These methods don't require insider knowledge or expert-level experience, just a willingness to learn and take action. And make sure to stick around until the end, because I'll share a powerful bonus tip that can help you maximize your returns even faster. Before jumping into higher risk opportunities, the first step is to protect your initial $100 investment while earning a small, steady return. A great way to do this is by starting with high-yield savings accounts or low-risk investment options like money market fund or government bonds. These options may not offer huge returns right away, but they help grow your money steadily and, most importantly, keep it safe. High-yield savings accounts offer interest rates higher than traditional savings accounts. While the returns might seem small, this is the perfect place to park your money while you plan your next moves. Similarly, low-risk investment options like bond ETFs provide modest but reliable growth while minimizing potential losses. This strategy works because it lays a solid foundation. Think of it as building a financial safety net. Before you can take calculated risks, you need to ensure that your initial capital isn't wiped out by a bad decision. Even professional investors prioritize protecting their downside before chasing big returns. Once you've accumulated a bit more, let's say $150 or $200, you can start exploring higher return strategies. The key here is patience. Many people fail at investing because they want quick results, but smart wealth building starts with steady, secure growth. With your initial $100 now working safely in a low-risk environment, let's move on to strategy 2, where we'll discuss how to use fractional investing to grow your money faster without needing thousands of dollars up front. Once you've secured your initial $100 in a low-risk environment, it's time to leverage fractional investing to accelerate your wealth building. Fractional investing allows you to buy small portions of expensive assets, such as stocks or ETFs, without needing thousands of dollars up front. This means you can own a fraction of high-performing companies like Apple, Amazon, or Google with just a few dollars. Here's why this strategy works. Historically, the stock market has provided an average annual return of about 7 to 10% over the long term. By investing in diversified ETFs or index funds, you reduce your risk while benefiting from consistent market growth. Even with a small amount like $100, these steady returns can add up over time, especially if you reinvest your gains regularly. Fractional investing platforms like Robinhood, M1 Finance, or Webull make it easy for beginners to get started. You can begin with as little as $5 and gradually increase your investment as you earn more. The goal here is to take advantage of compounding returns, the process of earning returns on both your initial investment and the returns it has already generated. By consistently investing small amounts in quality assets, you'll see your money grow faster than it would in a regular savings account. Now that you've learned how to start investing in stocks without needing a fortune, let's move on to strategy 3, where we'll explore how to generate passive income through peer-to-peer lending. Another powerful way to grow your initial investment is by generating passive income through peer-to-peer, P2P lending. Peer-to-peer lending platforms allow you to lend small amounts of money to individuals or businesses in exchange for interest payments. Essentially, you act as a mini bank, earning returns on your loaned funds. Here's how it works. You deposit your money into a peer-to-peer lending platform like Lending Club or Prosper, where you can choose borrowers based on their credit ratings and interest rates. Since P2P lending typically offers interest rates higher than traditional savings accounts or bonds, it's an excellent way to earn passive income on small investments. For example, if you lend $100 at an interest rate of 8%, you could earn $8 in interest over the course of a year. While this might seem small at first, it becomes more impactful as you reinvest your returns and increase the size of your loans. The key here is to diversify your lending across multiple borrowers. which reduces the risk of losing money if one borrower defaults. P2P lending is ideal for those looking to earn a steady cash flow while gradually growing their wealth. Just be sure to start with small amounts and choose lower-risk borrowers until you're more comfortable with the process. Now that you've learned how to generate passive income, let's move on to strategy 4, where we'll dive into flipping undervalued products for profit, a quick way to increase your capital. One of the fastest ways to grow your $100 is by flipping undervalued products for profit. This strategy involves buying items at a lower price and reselling them for a higher value. While this may seem like a hustle, it's a smart, low-risk way to generate quick returns, especially when you start with a small investment. You can begin by sourcing products from places like thrift stores, garage sales, or online marketplaces such as eBay or Facebook Marketplace. Look for items that are underpriced or in high demand. These can be anything from vintage clothing to electronics, books, or collectibles. The goal is to buy low and sell high, capitalizing on a product's true market value. For example, if you buy a set of branded shoes for $50 at a thrift store and resell them online for $100, you made a 100% profit. With just $100 to start, you can flip several items at once, and as you gain experience, you can scale the business by reinvesting your profits into higher-ticket items. The key here is to research and educate yourself about the products you're flipping. Use tools like eBay's sold listings or Amazon's bestsellers page to gauge the market value of potential items. By focusing on items that have a proven resale value, you're minimizing risk and maximizing your potential profits. Now that you're learning how to flip products for profit, let's move on to strategy 5, where we'll explore how to reinvest your profits into higher return opportunities. Once you've started generating profits from your initial investments, whether it's from peer-to-peer lending, flipping products, or other income-generating activities, the next step is to reinvest your profits into higher return assets. Reinvesting is key to accelerating your wealth-building process. Instead of spending your profits on non-essential items, put that money back into investments that will earn even more over time. Start by funneling your profits into growth-focused investments like stocks, index funds, or real estate. These assets typically offer higher returns over time compared to low-risk options like savings accounts. For example, investing in an index fund that tracks the S&P 500 has historically provided average annual returns of about 7 to 10%. With consistent contributions, your money grows exponentially through the power of compounding. The best part of reinvesting is that your money starts working for you. Each reinvestment builds on the last. Over time, you'll be amazed at how quickly your wealth grows, even with modest initial investments. As you gain more experience, you can gradually increase the amount you reinvest, allowing your financial snowball to grow faster. Reinvesting your profits ensures that you're not just building wealth passively, but actively accelerating the process. This strategy is essential for turning small amounts into large sums over time. With your profits reinvested, let's move on to strategy 6, where we'll discuss how to avoid the common mistakes that prevent people from achieving wealth. While building wealth may seem straightforward, many people unknowingly make mistakes that hinder their progress. To truly grow your $100 into $10,000, it's important to avoid common financial pitfalls that can slow you down. Let's go over some of the most common mistakes and how to avoid them. 1. Chasing quick wins. One of the biggest mistakes is trying to get rich quickly. Whether it's by investing in high-risk schemes or gambling with your money, the pursuit of instant wealth usually leads to loss. Instead, focus on consistent, steady growth through diversified investments and passive income streams. Remember, wealth building is a marathon, not a sprint. 2. Not reinvesting profits. Many people make the mistake of spending the money they earn rather than reinvesting it into their financial growth. To build wealth, you need to let your money work for you. The more you reinvest, the faster your wealth compounds. 3. Lack of financial education. Building wealth requires knowledge. Without understanding the basics of investing, managing debt, and budgeting, you risk making decisions that hurt your financial future. Take the time to educate yourself through books, courses, or financial advisors. By avoiding these mistakes, you can stay focused on your goal and ensure you're moving in the right direction. Now that you know what to avoid, it's time to turn your $100 into $10,000. You've now learned 6 proven strategies to turn your initial $100 into $10,000, quietly, steadily, and with calculated effort. To recap, we covered starting with high-yield savings and low-risk investments to protect your money. Leverage fractional investing to access high-performing assets. Generate passive income through peer-to-peer lending. Flip undervalued products for quick profits. Reinvest your profits into higher return assets like stocks and index funds. Avoid common wealth-building mistakes, ensuring your strategy stays on track. Building wealth from nothing is a journey, but by following these strategies and staying consistent, you'll start seeing your financial goals materialize. The key is to keep moving forward, learning, and applying what works. Now that you have all the strategies to start turning your $100 into $10,000, it's time to take action. Don't just watch this video. Implement these strategies and start building your wealth today. Start small, stay consistent, and watch your money grow over time. Which strategy will you apply first? Let me know in the comments below. I'd love to hear about your journey. And if you found this video helpful, don't forget to like, subscribe, and turn on the notification bell so you don't miss future tips on smart investing and wealth building. Join the growing community of wealth builders, and let's take control of our financial futures together.